Peter, good to have you here.
Good to be here. Thanks for inviting me.
Thanks for coming in. It's always great to have you. So, is recession coming? And for the many people in our viewing audience whose wealth is predominantly real estate, what could that mean? Could that mean a bursting of the real estate bubble we've been experiencing here?
Okay, well, as far as the recession is concerned, we did have a decline in first quarter gross domestic product. And if you have 2 quarters of declines in gross domestic product, that's one definition of a recession.
Okay.
Having said that, most people are downplaying the significance of that first quarter result because consumer spending and business spending was up, and the reason for the decline in gross domestic product was a decline in exports because other countries can't afford our products because our dollar is getting stronger. Having said that, the whole economic situation depends upon the unemployment rate remaining low. It's at 3.6%. If it remains that way, the economy is going to remain strong, and then we won't have a recession. As far as real estate is concerned, I do think that mortgage rates are going to go up. They could go up as high as 8%.
Wow.
And I think that given the prices out there, and you put that on top of the high mortgage rates, that's going to price a lot of people out of the market. However, there's such a mismatch between the demand and the supply that I think that real estate is going to hold up for a long time.
So this is a relatively sunny outlook.
Yes.
Now, you mentioned unemployment. That we've got to watch that carefully. Do you think, what are the chances that that could go up? And for people who lose their jobs, I mean, you've got to have a cushion ready.
Yes,
right?
you certainly have to have a cushion. I mean, in general, I mean, if I were advising anybody listening right now, I would say make sure you have at least 6 to 12 months worth of cash in the bank or in something really safe. Having said that, what I have noticed recently is that there are some companies that are laying people off. And it hasn't kind of reached a wave where I think it's going to increase the unemployment rate, but I have seen unprofitable companies that have reported revenue declines in the latest quarter, laying off lots of people. One company that laid off a lot of people was Netflix, but there are other companies like Uber and so on that are laying people off, and if that starts to snowball, then the unemployment rate could go up pretty quickly.
And particularly the tech sector is getting hit, right, which is obviously a big deal here.
Yes, it's a very big deal, and I wrote a book called Scaling Your Startup, where I talked about how a lot of startups were going directly from getting their first customers to what I call pouring gasoline on the fire, which is basically taking venture capital, growing unprofitably really fast so they can go public. The public markets for those stocks has gone away, and so these companies are now being told by venture capitalists, we're not going to put any more money into you, so figure out how to get profitable. That means layoffs. So, you know, this is affecting the private companies, and it's affecting the publicly traded companies that never got profitable.
We got to take our break, but inflation is nasty. Is it going to get worse? And what about the term of this period of inflation? I realize it's a kind of a guessing game. Even the Fed doesn't seem to know, but are we in this for a matter of years?
Yes, we are in it for a matter of years.
Oh, boy. Wow. Okay, so that's not so sunny.
No.
All right.